Hello and welcome to the special segment called MC Pro Select Stock of the Day. In this segment, we bring to you fundamentally strong stock ideas that you can consider in your portfolio. So today's stock of the day is SBI. If we talk about the company, then it is the largest bank in India in terms of the assets, deposits and the operating profit. If we talk about the balance sheet size, then it stood at rupees 63 lakh crore as of September 2024. Government of India owns 56.92% of the bank's equity capital. The bank also has one of the largest branch networks in the world, that is around 22,640 branches by end of September 2024. Though its non-banking subsidiaries and joint ventures, it offers a wide range of financial services such as investment banking, credit cards, life insurance, general insurance, fund management, primary dealership, broking and factoring. But now you may ask, what do we like about the bank? So strong business growth. SBI's overall advances grew by 15% year on year as at the end of September on a huge balance sheet, which is impressive. The growth in the retail loans that constitute around 42% of the SBI's loan book slowed to 12% year on year after RBI tightened the regulations for the unsecured lending. Growth in the express credit, that is the unsecured loans, slowed down to 7% year on year in Q2 financial year 2025 from 18% in Q2 financial year 2024. Now, within the retail, gold loans grew the fastest at a 28% year on year. The corporate loan book, which constitutes around 35% of the bank's domestic loan book, also saw a good traction, rising by 18% year on year. The bank's deposit growth of 9% year on year as of September end lagged the advances growth as well as the banking system growth. Despite the slower deposit growth, SBI is relatively the best placed with credit to deposit ratio of 68% on its domestic book as at the end September, significantly lower than the banking industry's CD ratio. Now management is comfortable up till CD ratio of 75%, indicating a headroom to grow credit portfolio at a healthy rate. Now the management is guiding the credit growth of 14% to 16% for the bank, which will be higher than the banking system's credit growth. Now SBI's loan growth will be driven by corporate credit demand, which has a pipeline of rupees 6 lakh crore. If we talk about the asset quality, then it is best in a decade. SBI's asset quality stands best in a decade with gross and net non-performing asset ratio, that is GNPA and NNPA, trending downwards and the slippage ratio remains very low. GNPA and NNPA stood at 2.13% and 0.53% respectively at September 2024 end. Consequently, the credit cost still is very low compared to the historical average, and management does not see it rising significantly even in the unsecured credit. Now, the management expects the slippage ratio and credit cost will be maintained below the 60 BPS and 40 BPS respectively in financial year 2025. Moreover, the high provision coverage ratio, that is your PCR, will cushion the future earnings. If we talk about the healthy return ratios, then SBI's margin at 3.27% in Q2 financial year 2025 is on the lower side compared to the private peers. However, high trading and mark-to-market gains boosted the profit. Now, if we talk about the operating expenses, then they have declined due to normalizing of wage expenses and helped in offsetting the muted margins. If we talk about the cost to income, then it declined to around 48.5% in Q2 financial year 2025. Now, delivered ROA, that is your return on assets, is of 1.17%, which is very healthy. With that, it's a wrap. For more such updates, keep watching moneycontrol.com and please like, share and subscribe to Money Control's YouTube channel.